Hello everyone. Welcome back to Forex Signals TV. I'm Shain Vernier, analyst over at ForexSignals.com. Over the past 6 years, Andrew Lockwood has been the face of this channel. He's produced hundreds of videos, everything from what's a pip to the cycle of doom. And I guarantee that if you've tuned into this channel, you've watched at least one of Andrew's videos. Well, after 6 years, Andrew's moving on. He's moving on to pursue other interests and really attack what's ever on the horizon. And I guarantee somewhere in the world, Andrew's in front of a trading screen, he's looking at his favorite pairs, and he's building a plan to engage the market from a position of strength. I think I can speak for everybody at Forex Signals and Forex Signals TV. When we say happy trails, Andrew, best of luck, and may all of your trades go to green pips. That being said, we have a lot going on over at Forex Signals. We have our interactive trading room, we have live streams around the clock, and we have a team of analysts that really break down the markets from a various different perspectives. Everything from scalping to swing trading to retail. We've even got some institutional participation showing us what it's like on the other side of the order desk. So be sure to stop on by and check us out. The experience is truly immersive and interactive. Now, back in 2011 when I started trading, my biggest issue was loneliness. One of the biggest challenges you're going to have in the market as a retail trader is when you win alone, you win alone. When you lose alone, you lose alone. With Forex Signals, you're never going to have that issue. Someone's always in the trading room, either our live chat or live streams. And that's a huge bonus to the trader that's just in front of the screens and wants a little input, maybe some feedback on their ideas, or wants a fresh take on the market. So whether you're a beginner or a market veteran, be sure to check out our trading room. Okay, on to the business at hand. We're talking Bitcoin today, and there's a lot going on in Bitcoin. Since November 2021, Bitcoin's shed about $2 trillion in market cap. $2 trillion in market cap. It's off about 52% this year, and as of this video, we're trading somewhere in the neighborhood of 20,000. A steep bearish trend. No doubt about it. So the real question is it time to step up and buy Bitcoin, or is it time to have a yard sale, get out of crypto, reevaluate, come back to the table later? Well, in my view, there's three basic market drivers, three reasons why Bitcoin, and really crypto, is in the shape that it's in right now. Number one, you've got pending regulation. We had a bill introduced here in the U.S. Congress that would give the CFTC, the Commodities Futures Trading Commission here in the United States, jurisdiction over crypto. The implications are immeasurable. At this juncture, we just don't know what that's going to do to Bitcoin. We don't know what that's going to do to the financial markets in general. So we've got pending regulation. That's number one. Number two was the Terra Meltdown. Anytime you have an asset that goes from being worth something to nothing overnight, it undermines the integrity of the entire system. So right now we have some major questions going on. What is crypto? Is crypto going to be around in 5 years? Remember, Terra was a stable coin. This was supposed to be the coin you go to when you don't want any risk. It's like buying T-bills or T-bonds from the federal government. It's the risk-free rate. It's what you invest in when you want to keep your money safe. Terra went from being worth something to worth nothing nearly overnight. Now, since then, there's been a relaunch of Terra and trying to institute some more confidence back in that blockchain network. The big thing, the fallout, has really hurt crypto across the board. And then lastly, monetary policy. We can't ignore monetary policy. We can't ignore what's exactly happening in the world as we see the world fluctuate from a quantitative easing perspective. COVID stimulus, COVID packages, unlimited money, every American getting checks, folks around the world getting stimulus checks, putting it into crypto. What does that mean when we start to unwind that? And the real answer is, we don't know. So in times of uncertainty, what I do is I fall back on the technicals. Let's pull a few price charts on Bitcoin. Let's see exactly where this thing is trading and if it's a good buy or if it's time to head for the hills. Okay, so where exactly is Bitcoin going over the next 2, 3, 4, 5, 10 years? I think our three market drivers that we outlined just a few seconds ago really speak to the long-term valuation models facing Bitcoin. The first of which is the new bill in front of the U.S. Congress right now, the Loomis-Gillibrand bill. This is designed to place crypto and Bitcoin underneath Commodities Futures Trading Commission jurisdiction. What does that mean? It means that crypto products are going to be treated like commodities. They're going to be traded like futures contracts, and the government's going to have an enhanced role in regulation. Basically, we may need formalized exchanges. The exchanges will be reporting to the CFTC. This is a quantum leap forward in regulation, and really the idea is to get a hold of the crypto sphere and see exactly where this thing's going before it goes there, meaning things like traded volumes are going to be apparent, registered, and through exchanges. Valuation models, open interest, things like that are all going to be standardized. This is a major game changer. On one hand, it may actually hurt crypto because it's no longer decentralized and anonymous and all that. But on the other hand, it may actually bring some confidence to the markets, meaning, well, now that we're exchange traded, we're regulated by the CFTC, maybe we have more confidence. Theoretically, that could help prices of crypto and Bitcoin in general. Now, our second market driver that I outlined was the Terra debacle. The UST coin, Luna, crashes from 80 bucks to zero overnight. This happened back in May. If you were there, I hope you didn't lose too much money. I hope you had a nice stop loss in there somewhere, or at least got out before the brush fire really spread. But many didn't, and the damage, the financial damage was palpable here, hurt a lot of people in a lot of different areas. On the other hand, it also questioned the viability of cryptocurrency. If this could happen to a stable coin, the world's top stable coin, what does that mean for something like an altcoin, like a Dogecoin, like a Solana, like a Monero? What does it mean to Bitcoin? What exactly does it mean to the world's largest cryptocurrency? I mean, that's a difficult question, and it really did undermine a lot of what we were looking at in the crypto sphere. Immediately after Luna, it's been all downhill for crypto, and we'll pull a chart here in a second, and I'll show you exactly where Bitcoin stands, really following your CFTC and your Luna. And the last, we're going to talk a little bit about monetary policy here. Just going to touch on it. It's been a controversial subject. Are crypto immune from monetary policy? Is it a situation where, interest rates, interest hikes, all this stuff, rate hikes, rate cuts, QE, QT, does it impact crypto? And it was long thought that wasn't the case. This research paper from last year out of Deutsche Bank really showed a different type of a narrative. If you actually get an opportunity to review this, or Bundesbank, Deutsche Bundesbank, you'll see that the results were what? Strikingly, I did find that their FX difference sign, a disinflation monetary tightening by the Euro system lowers valuations, whereas a tightening by the U.S. Federal Reserve increases Bitcoin prices. Now, clearly, we're in a much different dynamic than we were back then in 2021. But we can't really deny the fact that now that we're in a tightening cycle, now that we're in a tightening Fed cycle, these results may be in question, but what we are seeing is price action. There's no denying that since the Fed's gone hawkish here in the United States, the price of Bitcoin has really struggled to gain a foothold. Why? Because we're tightening, we're reducing the money supply. The days of easy money and unlimited QE are over. A lot of that liquidity is being removed from the markets in general. I don't think the crypto market is any exception to the rules. So these results are fascinating. What I would take away from them is, yes, there is a correlation between monetary policy and Bitcoin performance. What does it exactly mean? Only time will tell. We haven't seen a hawkish cycle like this from the global leaders in monetary policy for quite some time. For everybody on YouTube that hasn't been to our trading room, I wanted to take a quick second and really outline some of the highlights here. Really, we've got a live chat feature. We've got live streams around the clock. Everything is on demand. So while we are going live, you'll see our analyst right here, Scott Greer, is going live in about 10 minutes. I'm up after that. Max Norberry's there for the UK overnight. He's been in the saddle for about 4 years. We have a new analyst on board, Nick. Nick really does his analysis from the institutional side. From the institutional side of the markets. He worked for Lloyd's of London. He understands what it is to really be running a book, understanding what it is to be on not just the retail end of things, as he is a retail trader, but also from an institutional banking perspective, a lot of key insights and really key stuff. So right there, if you haven't checked out our trading room, be sure you check out your free 7-day trial. You'll see market analysis really across the board, trading ideas, really anything you need. We have a beautiful economic calendar that's a fantastic feature that really gives you everything you need when you start talking about monetary policy and Bitcoin. Well, it certainly helps. It certainly helps to know exactly when these events are. And we have all the events from Canadian CPI, really to Japanese foreign bond investment. We've had it all right there in front of you. This really is an interactive trading experience and an opportunity to take your game to the next level with the guidance of professional mentors and peers. So it's really a fantastic tool. We welcome you to your free trial. Once again, be sure to check it out. In any case, let's get to Bitcoin. Here's our chart. Now, this is sort of what we do on the live streams every day. We'll get in here, and if you watch some of Andrew's videos, you've seen 1,000,001 charts in his approach to the markets. Mine's a little bit different, as is Max's is a little bit different, as is Scott's, as is Nick's. We all sort of do things a little bit differently. There's no right answer to any of this. I'm going to show you my take on Bitcoin and why I could build a bullish case or a bearish case. So right here's your monthly chart of Bitcoin. A couple things I want to point out right here. Number one, we had the COVID-19 panic of March of 2020. In my view, that it was one of the key economic events in modern history. We saw an epic panic and we saw sell-offs in everything from our equities markets, from our stocks to commodities to crypto. And if you take a good look at our COVID-19 March 2020 panic lows, our panic lows are right around $3,850 for Bitcoin. Okay, let's fast forward a few years. A few years, basically, 18 hard months. In any case, you go right here, you'll see this is the era of monetary policy, dovish monetary policy. We are injecting trillions and trillions of dollars of capital into the financial markets, into the pockets of citizens. What does that exactly mean? Well, it means there's more discretionary income. That means there's more disposable income, and that our financial system has more liquidity. Clearly, crypto is a beneficiary of that. So you see this nice run up really as the dollar, things like the US dollar are getting weaker, as fiat currencies are being devalued. All of a sudden you see this rush of value really flood into crypto. There was a nice initial rise, then a pullback, and then you've got your all-time high right over there. It's 69,000 back in November of 2021. Now, since then, we really have seen an epic downtrend. I mean, if you really want to look at the breadth and the scope of this on a monthly time frame, you're looking at about 6 down months compared to two gainers, 6 losers to 2 gainers. And right here, you've got about a 12% gain and a 5% gain. Well, you come right back with a 17% loss. And right now in June of 2022, which if you could put your parka on, this would be the 45 below, the 50 below, the crypto winner. Right now, we're off about 35% on the month. So you say, Shane, okay, we know this. We all can pull a price chart. Well, here's how I would look at this. I'm a big fan of Fibonacci retracements. This is something that I use basically religiously on the streams as we break down everything from crude oil to corn futures. That COVID range is everything to me for Bitcoin. When I take a look at the price of an asset such as Bitcoin, which is number one, highly speculative, number two, highly popular, speculative and popular, look at our valuations. We've seen a steady decrease. We had some nice compression right around 38%, that 44,000 level, that 45,000 level. Right there, our uptrend is still very much intact. We're feeling good to the top side. We're much closer to all-time highs than we are to the panic lows of COVID-19. And our 50% level held up nicely. Nice compression here. And over the last 3 months, you've seen price basically what I would call fall out of bed. We're seeing a stiff downtrend towards the bear. Last weekend, we had a bounce, or really, I guess, the first weekend, second weekend of June, excuse me. I don't want to date this too much, but you'll see the 78% retracement right there at 17,625 really withstood a nice test of 17,592. Since then, we've just seen one heck of a bounce back up above 20,000. 2 ways to look at this. Number one, steep bearish trend. I don't think that anybody can deny that. If you look at 78% right here, it's the point of no return. For me, it's the point of no return. If 78% is taken out by Bitcoin, we could easily see pre-COVID levels. And I know a lot of you don't believe that, but believe me, it is very, very possible. One thing to remember in crypto, all is possible in crypto. In any case, 78% is a big time level. So if you're trading crypto, I would have 17.5 in my head somewhere, have it written down somewhere. Now, the other way to look at this is, okay, if I'm bearish, I'm basically selling under here and I'm looking for a shot at pre-COVID lows. On the flip side of that coin, if I'm a long-term Bitcoin fan, if I love crypto in general and I want to get involved, we're at a fantastic level. We're at 17,625, 78% retracement. We can step up and buy into 20,000 and theoretically put together that intermediate to long-term run back towards 70,000. That's very possible. So on the one hand, you're in a steep bearish trend. There's no doubt about it. On the other hand, bargain hunters were there at 17.6. Will they be there over the long haul? Can we bid this market, get that accumulation trade back to 69,000? I think that it's very possible. My own personal call. I think that if a person wanted to go long there, that's a pretty darn good long. But on the flip side of that coin, remember, there's a flip side of that coin. If that 78% retracement is taken out, buckle up. 15,000, 10,000, 7,500. There's no rules to the downside of this market. So if you're in it for the long haul, maybe not a bad place to dollar cost average in. If you're just in it for a quick pop, you might want to wait a little bit and let this market get its sea legs, recover from those market drivers before we move forward. So that's basically it on the technical front for me. I think that monthly chart, that COVID range, says it all. If you're going to be trading Bitcoin, if you're going to invest in Bitcoin, those anchor points in that COVID-19 range, that's key. So as you can see from the technicals, we can make a strong bullish case or a strong bearish case for Bitcoin. It really just depends on what you think about Bitcoin. If you're confident in the future of digital assets, digital currencies, then now's the time to buy. As the old saying goes, millionaires are made in bear markets, and if you believe in crypto, then you're probably not going to get a better deal than what you can get right now. On the other hand, if you're bearish crypto, if you're skeptical of things like Bitcoin and Ether and Ripple, Dogecoin, then your concerns are being validated. There's no arguing with the downtrend that we're on. We are in the midst of a crypto winter. The real question is, when's the thaw? If you want to drop your own prognostication or projection in, choose a side of this market. Post a comment below. Give us a price point. Give us a long-term, intermediate-term expectations. We always love to hear from the public, traders just like you, what you think. Just drop a comment below, and we'll see if we can get to some sort of consensus. Is this market bullish? Is it bearish? What do we think about where the future of Bitcoin may be going? Also follow us on the socials. We post trading tips, give market insights, and talk about everything finance. And also, if you haven't checked out your 7-day free trial of Forex Signals, do so. It's a fantastic interactive trading experience. We have around-the-clock live analysts. We've got a live chat feature. We've got direct messaging, one-on-one interaction with our analysts. If there's a market moving, we're going to be all over it. If it has a pulse, we can trade it. So we're looking forward to the future. We have a lot going on the horizon, even some ways that you may be able to become a professional trader and really build a career and longevity in the marketplace. So don't hesitate. Be sure to sign up for your 7-day free trial today. And as always, trade the action well, and we'll talk soon. See ya.